Hello, traders and investors. Steve Ganz here, and I want to share a concept trade with you. This is something that I'm looking at on my account right now. It's something that I've done previously that I've shared, and the time may be right to consider it again. It depends, of course, on your opinion of the market. But let me show you what I'm seeing and then what I'm thinking on doing about it. So if I take a look at SPY, obviously, we've got these massive gyrations that have taken place here. Of course, we've had the lows here last week, and then we rocketed up on that news late last week, and then we've sort of chopped sideways here. We gapped up today and then are selling off now. So right now, we're not really punching through this 550, and quite frankly, I don't see a catalyst that would make that happen. The threat of significant tariffs across the board has been pushed back by 90 days. Of course, that can resurface at any time and in any level of strength. We just don't know. I just don't see anything really that's going to, spike this higher. So I'm considering this 550 somewhat of a resistance level that we might roll back off of. So if that's my opinion, and I'm thinking over the long term that we're more likely to roll back down here, maybe even make new lows. We're going into earnings season, and there's going to be a lot of questions there from companies about, what can we count on, what can't we count on, etc. So I think everybody's going to start coming out with what I'll call a revised and reduced earnings expectations going forward, just because they don't really know what to expect. So as a result of that, again, my projections is probably a move back down. So if I wanted to do something in my long-term buy and hold account that might hedge my current holdings that I don't want to sell out of, my Amazons, my Apples, etc., what might I consider doing about that? Well, if I really don't think we're going to get much above that 550 range, I'm even giving myself a little buffer. I'm going to 560 here. I can sell 560 calls, and then I can go out at some point. I can choose my point there and buy 3. And what I'm doing here is I'm kind of doing it in a ratio. It doesn't have to be this exact ratio. A nice thing about a tool like OptionStrat is I can come in and I can play with all sorts of different numbers. I can play with all sorts of different expirations, all sorts of different strike prices. But this is what I've modeled up here right now. So I'm going to sell 3 call spreads, the 560 to 600 range, which of course is this right here. Then I'm going to use those proceeds to buy a couple of puts. So what's that going to do for me? Well, if we just chop sideways here between 510 and 560, even up to 562.73 is my break even. If we just chop back and forth in that general range over the next 3 months, well, I will end up making about $847 in profit as this decays, and it just decays right there to that expiration line. Now, if we do, in fact, get that sell-off that I am thinking might be possible, well, depending on where that sell-off goes to, we get back down here into the 500 range or so. This could be at about a $6,000 profit, somewhere in that range. And that profit, of course, is really just going to offset what I'm losing on my other long positions at that time. A person needs to judge and evaluate how much of an account you want to hedge. In other words, you may want to flatten your deltas and pretty much hedge your entire account. That's one possibility. What most people tend to do is they might hedge their account by 30% or 50%. And again, that depends on what your conviction is of how likely we are to have a down move. Now, as far as me building out this model here, another thing that I might consider doing is maybe I want this 510, maybe I want it at 520. Well, I'm going to pay a little more to have that closer. And I'm going to end up here where, if I chop back and forth in this range, I'll be down $69 or $100. So I'm paying a little bit in this particular case for this entire configuration. And I'm basically paying $60 to have some insurance on board. And again, I'm choosing where I want that insurance. Well, maybe I want my insurance much lower than that. It's like, you know what? I really only want to be insured if we're going below 480. Above that, I'm fine having a little bit of profitability here if we decay in this general range. So again, awesome tool here. I can come in, kind of slide this around and figure out exactly where I want to start covering my risk to the downside. And do I want to end up profitable if I stay in my range? Or am I willing to look for a little more downside protection and know that, gee, I might end up paying a little bit for that if we decay in this general range? So the nice thing here is I can model this all up, look at all sorts of different scenarios, and see what makes sense to me. I also, of course, need to have a plan in place that if our market does start to move up considerably, right now I'm showing this at expiration. If I come back and show it here, we can see that on my T0 line, if we move up in the meantime, this is going to be showing some loss. Am I going to have the fortitude to stick this out? Or maybe I might need to adjust it somewhere along the way and give up on my thesis. Well, from my perspective, my personal thesis here is I expect us to probably stay below 550. If we break above 550 and close above 550, that's going to be the point that I would personally look at maybe either taking this trade off or reconfiguring it into something like maybe an iron condor. So maybe my thesis at that point, let me just move this back to expiration, it's a little easier to see. So maybe my thesis at that stage, if we do in fact move up here, maybe I feel I no longer need this downside protection. Well, at that point, I can come in and I can sell a put spread here, turn this whole thing into a condor. And if I turn this whole thing into a condor, that's going to raise up my profit tent a little bit. And then I'm just looking at playing this back and forth in that range. So hopefully this all made sense. And again, the cool thing here is I can model this thing up, play with my thesis on what the market is going to do, I think, and then I can build a trade around that using options. Take care, everyone. Please, if you like this content, like, subscribe, give me any comments down below. Take care.